Hi folks, it's Steve again from the Forex Codes. I want to talk to you today about my favourite indicator, and that's the TFC Squeeze indicator. So let's take a look, and it makes me money. Hi, my name's Steve Margison of the Forex Codes. In this video I want to introduce you to the TFC Squeeze Indy. TFC, of course, the Forex Codes. I've used this indicator for many years, and I've been trading 15 with constant refinements that experience gives. The TFC Squeeze is an important tool in my achievement of the 0.5% a day that I get. And here it is on the chart. At the bottom here, where I've got my cursor, that's the TFC squeeze. Now, if 80% of the time the markets are chopping around, that means 20% of the time they're showing what we call conviction. Conviction is the market taking a direction, long or short. And I measure conviction with volatility. The squeeze measures a compression, like there, look, compression, and volatility, when it starts to move, of the market, whatever time frame, whether it's index, stocks or Forex that you're looking at. It gets to a point where it can't get any more quiet, like a coiled spring, and has to release energy. Let's have a look at a real one. See here, coil spring, very quiet, low volatility, and it has to release this energy either long or short. Our job is to find out which one it is, and we can do with 75 to 80% accuracy. Now, the red dots on the squeeze indicate the compression, the quiet before the storm, if you like. And they'll let us know, this is a heads up, that at some time along here, the market is about to release energy and this currency pair is going to move. Now, we have a load of other tools to project which direction the market is going to move. Because obviously that would be handy, wouldn't it? The squeeze is, in my opinion, the best way to get positioned for the big market moves on whatever time frame, even 5 minute, because 5 minute often gauges that the way price is going to move that day. The markets never break when they are expected to, and they'll always do so only when they're good and ready. Usually when the greatest number of traders are unprepared and surprised. So as traders, we need to be positioned ready for when the market volatility increases. And that's what the squeeze gives us. The TFC Squeeze indicator, in fact the TFC Squeeze indicator, helps us to be prepared for a market move. And you can see that with the red dots. Red dots get prepared. Get prepared. Look along here. Look at the length of that. Now this is a 1 hour chart, so every one of those dots is 1 hour. That's something like a 24-hour squeeze, another 24-hour low volatility, 24-hour of a coiled spring ready to go. I'm just going to put this onto a 30-minute. Another one here. Look at this. That's a massive squeeze, telling us, get ready, this is ready to pop. What we need to do is, which way is it going to go? Now, as I say, the squeeze works on all time frames. It's extremely useful on higher time frames as well, because if, for example, the squeeze fires off long on a 1 hour chart, it's going to prevent me from taking trades short on lower time frames until that squeeze is played out. So just like here on the Euro card 1 hour, the squeeze fires off here and fires off long. Predicted, and there it goes. Once I've got a 1 hour squeeze on that time frame, all EuroCAD shorts and any lower time frames are off. You know, now if 90% of traders had just had that information, you know, the losses would be halved. Absolute fact. What I mean by played out is the light green is when the squeeze is going, and if you get 2 dark greens in a row, the squeeze is played out. Okay. Likewise, let's say a weekly squeeze fired off long. I wouldn't take short trades on the daily, or maybe not even lower. Weekly squeezes are rare, but they're very effective. Also, as a day trader, I've learned one golden rule, and I want you to remember this as I go onto a different screen. Never fight the 5-minute squeeze. Okay, the 5-minute squeeze fires off long. Don't be taking any shorts until it's played out. Okay, now a good squeeze typically lasts between 7 and 10 bars. So that's 7 minutes on a 1 minute chart, 7 days on a daily chart. And you can see that roughly here. Look, and there, and so on. Sometimes it's longer if it's real volatility. So, as long as the momentum histogram is light green on a long trade, the squeeze is in and strong, like there. When the histogram turns dark green, the momentum is reducing. There you go. Could be a signal to get out well before that. And vice versa. For a short trade, the red, the lighter red if you like, the squeeze is operational. When it goes dark, it's finished. Squeezes have about a 75%, 80% win ratio. And you know, not every squeeze is a Grand Slam home run. Sometimes a squeeze is just a nice little win. Then of course sometimes you get those trades where it's like take the money home to the bank. Quick example here. Absolutely fantastic squeeze there, look. 80 points, something like that. Whereas this one, very small squeeze. This one, medium squeeze. So little wins and big wins, there's nothing unusual about that in any trade. You can set price targets as well using the squeeze if you're so minded to do so. The 127.2 extension of the swing going into the squeeze, or even the 161.8 if you're taking partial exits. But I'll show you what I mean. If you look here, let's go to the Fibonacci from that high to that low. If we take in the long squeeze, where we're getting out, 1272 or 161. So the 1272 is here, almost at the high of that, and the 161 is there. So you might have gone T1 out, T2 out. So that's a pretty good principle to use, the 1272 extension on the Fibonacci. Now personally, I prefer to play bullish charts in a bullish way and bearish charts in a bearish way. Right, what do I mean by that? Now, I like to use a squeeze as a trend continuation indicator. We're placing a trade, or a bet if you like, that price will explode higher or lower in the direction that it's currently going. By riding the trend in the current direction, you're picking a higher probability play versus swimming against the tide. Let's look at this one. Squeeze goes off long here, goes up to the 127, doesn't it? Comes back to the wave, and you can see low volatility again all along here, and you can see it with the red dots. Low volatility again, ready to explode, and I'm expecting it to explode with the trend, in other words, upwards again. And that's what we get. Squeeze goes off with the trend again. Yep. Further off, comes back to the wave just slightly below it, and then the squeeze here fires off with the trend again. Yep, with the trend again. Best way to use it, trend trading. Not the only way, but certainly the highest probability. So understanding the terms, picking out which setups you like, getting comfortable with the triggers, will lead you to one place. And that one place is making money. Trading is all about identifying and acting on high probability setups and patterns that we see in the markets. And more importantly, understanding how our traders manage the trade and take profits. My goal over time is that you will be able to identify high probability setups and make money with them yourself. Now, this is very important. You can't just blindly take any squeezes as they come. You've still got to look at the time of day. Is it London Open? Is it New York Open? Are we getting towards the end of the day? When even if we've got a squeeze firing off, there's not much volatility, is there? Because all the traders have gone home. So you've got to look at the time of day. You've also got to look at average daily range. Let's just switch charts. This dashboard here, TFC dashboard, tells me the average daily range of whatever currency pair I'm on. In this case, it's the Euro Aussie. Now, the average daily range, the weekly average daily range is 114. If we're in a situation where the market's gone 110 and then we get a long squeeze, in a long direction, we get a long squeeze, I'm unlikely to take that squeeze because the average daily range is practically played out. It doesn't mean it won't go higher. What it means is it's a lower probability, and I don't like low probability trades. Other things you've got to look at, support and resistance. Is the squeeze firing off into a major resistance or support? And all the other things that a trader has to look at. That's called price action. And you've got to know price action to be able to use these indicators. You can't just blindly use them. And I have supporting indicators that confirm my squeeze trades. And these supporting indicators are these two sets here, which are the cloud, the wavy line here, the tricks, the wave on the main chart, and the TFC candles, which tell me, and I'm going to do a video on every single indicator and tell you how they all work together and show you how they all work together, more importantly. So, to finish off this section, let's have a look at some squeezes today. Today wasn't a very volatile day because it's Thanksgiving and the United States was shut, so you had no afternoon US market. But let's have a look at what we did have, and I can show you what I'm looking at. This is the Aussie Yen 5-minute chart. Earlier on today, we got a squeeze short on the 5-minute chart, and you can see everything goes red here. I go color code. Everything has to be red, 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 red candles. Once it breaks here, just below here, this particular support point, once it's gone below there and fires off, I'm happy that's a short trade. That's on the 5-minute chart. Everything's red. If we go to the 1-minute chart, at the same time, about 16:35, 16:40, you can see you've also got a 1-minute squeeze at that time, breaking that low there, that line, that low there on the 1 minute. Can you see everything's red? Below the wave, red candles, red cloud, red tricks, red bars that have fired off. 1-minute squeeze and a 5-minute squeeze at roughly the same time on the Aussie Yen. I call that a squeeze within a squeeze. A squeeze within a squeeze is when you've got more than one time frame at the same time showing squeezes. Oh, you know, get ready for an explosive move, and we did, didn't we? Look at this. Even on the 1 minute chart, that's 81.90, 81.72, 18 pips on a 1 minute chart. You know, it's fair money. Euro CAD 5 minute again, and there's your squeeze. There. Here, red, everything's red, clouds red, the bars are red, you can take that. Now, if you haven't got out here, which is about 17 pips, if you haven't got out there, then you're going to have to ride the wave. It goes back to the wave, and on it goes again. Okay? And that's EuroCAD 5 minute earlier on today. Finally, just to change tack, well, not finally, I'm going to show you one more, but just to change tack, let's look at the ES 500. The ES 500, see that's in yellow, that's what it is. I can click to any currency pair on here, on this dashboard. Now you can see here, we got the squeeze here. There's your low volatility coil spring calling up there. Then your clouds go red, then your tricks goes red, your candles go red. Wait for the break of the support there and wallop, and you're in. And that's a good trade short, you know. And that was today. 26.38, 26.28, 10 points. Thank you and good night. Okay, let me show you a different time frame. EuroCAD 30 minute. EuroCAD 30 minute. Now, if you look at the squeeze here, let me just put that there. You get a squeeze here, everything's green there. You've got this candle coming through, and then everything's green after that, after the red bars. So you're going long probably after the double O's, and then that's a good trade. Here you got a short squeeze, which is fine, it's good, but if you're going 100% by my rules, you haven't took it because the daily didn't go short. Now, a lot of traders that I've taught on a 30-minute chart don't need the daily. They're happy with the 30, 1 hour and 4 hour being red. So some would have took it and some wouldn't. Now before that, squeeze here long, and then you got a long, that's about a 6 hour wait, coil spring, bang, there you go, 80 pips. Looking further back, one there, probably not taken for those that trade 3 lights, not taken for those that take 4 lights. That possibly a loser, depending on when you got in. That's where you keep tight stops. This is a long squeeze, great squeeze, you know, that's right up there. Short squeeze here, look, fantastic. From there, everything's red, 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 red. 10 o'clock in the morning. You've got 3 out of 4 lights, so your more aggressive traders will trade that. Long squeeze there, but you'd have got it further. You've got a short squeeze there, which would have fired off. You know, it doesn't look like much, but that's still 40 pips. And so on. You get the idea. This video is getting long now. So that's the squeeze. It's a fantastic indicator. It forms a lot of my trading, along with price action and my indicators. That is the cloud indicator, which is these 2 indicators here. Higher time frame cloud. Higher time frames. I want to know what they're doing. Tricks. My wave and my TFC candles. If my candles are green, I'm not shorting. If my candles are red, I'm not going long. That 90% of the traders will fail. That'll put it down to 45% of traders failing if I just adhered to that one rule. Right. So that is a TFC squeeze indicator. In the next video, I'm going to go on to a different indicator so that it puts this jigsaw together. This is putting pieces together to make a trade. And I think I've introduced that to you today. Now, remember, please like, subscribe and share. Share with your friends. People want to know about these kind of indicators. And remember, how you do anything is how you do everything. Think about that. See you next time.